Hi, everyone. So welcome to our panel today on D2C brands in Southeast Asia. I think this is always a topic personally that I think it's a lot of fun, right? It's a fact that it's something that you encounter in our day-to-day lives. I'm sure there are brands that we love and we see a lot of new age digital brands that are disrupting the industry. So maybe I could start by maybe asking our panelists here, maybe Stephani, if you could start maybe sharing about your journey as a D2C brand, how you feel we have really kind of disrupted this industry for pet care and pet food.
Okay, so thank you, Yi Ling. So hi, everyone. I'm Stephani. I'm actually from Compawnion, and this is my first time basically being here. But it's nice to meet you all, and I'm honored to be here. Actually, being disruptive in this industry means that we are getting connected directly to our customers. So being relevant and being approachable is very important for us. So as a parent myself, parent is how we call ourselves as a pet mom, dog mom, or cat mom. So we really, really understand the needs and the pain of customers. We also have pets so that we enter the communities of pets. And by that, we truly understand their needs and things, right? So then again, how it's different from the traditional brands is first that we have innovative products. So for those that don't know Compawnion yet, because we're still very new, again, we actually is entering the pet health and nutrition market. So we are probably the first in Indonesia and probably in Southeast Asia as well that has been doing really comprehensive research and scientific evident product in pet nutrition. So we do have our own pet nutritionist. So there's my partner that is a certified canine nutritionist. She's like the first advanced canine nutritionist here in Indonesia and probably in Southeast Asia. That's why we formulate our products, we produce our products that can cater the needs that are untapped with traditional brands, actually. So there are this is fun because there are cats and dogs are actually sick, for example, kidney disease. But then again, when they use the kidney disease product from other brands, other well-known brands, they're getting even more sicker than they should be. That's why we enter the market and be the right product for them. And the second thing is actually, is the extensive customer experience and service. So all of our sales and marketing personals, they must have pets their own. They have to enter communities. So we're getting near to them. And actually we have monthly user-generated content with our customers, with our resellers, with our influencers and vets, so that people are all connected into our platform and onto our brands. So we have 2 brands right now. We have Paw Mills, a frozen pet food. We have Yugo, a shelf-stable one. And we're going to enter cat food market by end of this year. And it's actually a mass market product. And the last one is actually in targeted marketing. So this is a little bit different from the traditional brands. So we do believe that fostering brand loyalty and trust is important. That's why we do have a flexible subscription for pet food. Anybody of you have pets here, actually? So we have really nice. You're our targeted customers. So yeah, this is one of our way to target you right now. Okay, so we do have our flexible subscription model so people can be entitled to check their dogs and their cats need what certain kind of proteins and stuff. I think that's how we differentiate ourselves. Thank you.
Yeah. No, thank you for sharing. I think clearly it's the way that you engage with the consumer, right? And reaching them directly without going through intermediaries. I think social media and the ability to build closer relationships and forge customer loyalty. Maybe if I could then maybe ask Jackson, right, as it relates to yourself, you specialize in collectibles, designer toys, and more than that, it's going. I heard the term. I got the term phygital on your website, and all the very interesting events and experiences that you try to bring to your customer. If you can elaborate about that and how that differentiates you as a D2C brand and platform.
Yeah, in our line of work in the industry, it's all about scarcity and exclusivity. So the less quantity it is, the higher value that it drives, right? With a lot of luxury items as well. So if that is the name of the game, from the get-go, it is always D2C. But of course, we have to identify where in the market is more mature in the world, right? So US is one of those, Hong Kong is as well. So from the get-go, it's always D2C from that perspective. But when we talk about scarcity and limited products, that's hardly venture backable. So, as we think about how the company should scale, and that we know we shouldn't, at a point of time, we shouldn't consider setting up flagship stores or any kind of our own channels, then we have to do a very Trojan horse way of doing it, right? And so what we did is that even though our products go from 500 US to 10,000 US or so, depending on the size, we decide to go into mass market where we have $10 item, $5 item that you would find in 20,000 stores worldwide. What we do with them was to spend a little bit extra to put in a chip into the product. Actually, all of you sort of force-fed our product today because in your goodie bag you have a horse, figure that is commemorative of this event. That at the bottom, if you use the Mighty Jaxx app to scan it, it will actually bring you through an onboarding process of which it authenticates the product through blockchain and so on. So it done in such a way, you think about it with 1 million units across 20,000 stores, then naturally we begin to have more insights about the customers who buy the product, even though we don't own the stores and the channels, right? And if I can understand you like One Piece now or DC Comics or Marvel or whatever it is, that just means we could build better products to serve our customers. So that is how we look at it.
Yeah, thank you. Yeah. And Roshni, I know you talk about the 3 pillars of Parentinc, right? You have content, community, commerce, and also building exciting brands that cater to mom, your key customer group. Could you elaborate on that? How is that disrupting existing incumbents?
Yeah, so the way I look at myself is I'm the mom of moms. And really, if I look at our business, right, so we start off with content and community. So our content and community brand is the Asian Parent. And the Asian Parent has 25 million monthly active users, which means 7 out of 10 pregnancies that have working internet connection is using and downloading the Asian Parent to track their pregnancy journey. But for some of you who attended my earlier session, in the morning, I shared that even though I had all these moms, I couldn't make any money. I peaked out at $10 million. And that's when it hit me, holy crap, media doesn't really scale. It's so hard to make money from media. And so I reached this inflection point, and in 2019, I said, I have all the moms. How do I make money? Because I can't be selling advertising spaces. So that's when we launched our first brand, which was called Mama's Choice. Mama's Choice is a halal skincare brand focused on pregnancy, breastfeeding, and baby. You'll have some of our products in your goodie bags, but you'll also see some of our products outside of this conference room. And please play around with it, touch it, feel it, and it's put at a very affordable price range. And we distribute that across 8 markets in Southeast Asia. So Singapore, Malaysia, Thailand, Indonesia, Philippines, Vietnam, Cambodia, and Laos. And then at the same time, we launched our second D2C brand, which is luxury swaddles, bedding, cribs for babies. And it's super high-end, it's bamboo muslin. When you touch it, you will want to change to your baby sheet and your baby's blanket and your baby's pillow because there is nothing like this in the world. And that's really focused on the super premium market. And then we are distributors as well. So we're distributors for some of the world's most famous baby brands, mostly in the stroller industry as well as the car seat industry. So these are high ticket items, which, my one basket size makes sure that you are profitable from the moment you enter my store. So that's Upper Baby, Stokke, some of the world's most loved brands in baby goods. And so that's our physical retail and distribution. So physical retail is our offline community. So we have luxury baby stores across Singapore, Vietnam, China, and it's called Mother's Work. So everything mom and baby.
Yeah. No, so I think clearly everyone here, we should all go back to dig through our goodie bags for all the products. So we can all say that we actually own products from companies like...
So the next time Yi Ling asks us this question, whether you've used Mama's Choice, we'll have 100% saying yes.
Yes. And more importantly, it will be the repeats, right? You know, if you like the product, come back for more. So maybe moving on to the next topic around, in this current environment, right? What are the broad trends that you see, whether it's, in some cases, sustainability or flight to value, given the current economy? For some markets, it's not doing the best. If you could start, maybe for Stephani, do you pick a trend that you see that your customers is actually, really feeling that speaks to them, and how do you then address that need?
Okay, so the trend that we're seeing the most is actually the polarization. So there is a huge gap, and the gap is widened between the premium ones and the ones that are economic. So those who are premium is actually trading up. So they buy more premium product, they premiumize. But then again, the middle kind of segment, middle priced, are actually trading down.
Okay.
So they buy a more cheaper products. And this has been shown in the numbers, actually. So the growth in the pet food category here in Southeast Asia is actually 25 to 30% in the premium ones, and then followed by the economic ones, 17 to 18%, and then 8% for the middle ones. So that's why it is important for us to find the strategy to tap in like the premium markets for us to get the, higher margin. And again, to scale, we also need to tap even the lowest kind of market, the economic ones. So that's where we're seeing.
Got it. And then also for, I guess, Mama's Choice, the way you position your brand, right? How does, if you can share some insights there too, do you see the same trend that Stephani is referring to?
Yeah, so definitely, right? So, we play in the super luxury premium space through Little Ray and Mother's Work. And we do see that when you're talking about, at the luxury market, or you're talking about high end, it's super price insensitive. A woman walks into the store, spending 1,500 on a stroller, 1,700, 1,900, it's all rounding errors to her. Because at the end of the day, whether I'm spending 1,500, 2,000, or 2,002, or 1,003, doesn't really make too much of a difference. Because I'm already in that price bucket that thinks that it's okay to spend $1,000 odd on a stroller. And we're realizing that even in the luxury market, people buy multiple of everything. So I was having some consumer focus groups, and I was talking to the moms, and I said, how many strollers do you have? And they're like, when we go jogging, we use our upper baby. When we're going on a flight, we'll use, like the yo-yo. And then if we're going trekking, and I see a few of you dads nodding your head, going, oh my God, it's so true. And at the end of the day, they've spent $6,000, $7,000 on strollers. That's like the price of a motorbike. So, so we do feel that when you go super high end, people are so price insensitive that sometimes, internally we just look at it, and when we're coming up with a new SKU, we go, hey, what's the most expensive baby washcloth out there? Oh, there's a baby washcloth, which is like a handkerchief, okay, for a baby. Maybe it's selling for like, the most expensive we can find is like $19. We'll say, okay, let's price ourselves $29. Because it's more expensive than anything else. And that is our positioning. We are more expensive than anything else out there. And people buy it. So I do agree with Stephani that there is a lot of growth in the super premium category. And they're quite price insensitive. Now, I also agree that, the problem is, of course, finding yourself at the low end, like how low can you go? So one of the problems here, of course, in Southeast Asia is that we're not immune to Chinese brands entering into our market. And we're not immune to, people who own the factories coming directly, right? You've got Temu, who just launched in Thailand last week. Oh my goodness, Lord, that is going to change the Thai landscape completely. You've got Temu that launched in Malaysia and Philippines in the beginning of this year. So if we were already scared by Shein, like the world's going to change with all of these other Chinese applications coming here and looking at our markets. We're seeing Chinese, I just spent 2 weeks in China, and I'm seeing almost every other Chinese brand wants to come into Southeast Asia. That is like a number one priority for them. So when you go low, the question is, how low can you really go? So I think that there's a risk when it comes to that.
Yeah. So I think for maybe Mighty Jaxx, you have a different audience, right, that you are targeting, and it's a very specialized niche market, and nobody really does, at least not that I'm aware of, something that's so similar. So do you feel that then actually for your product, you can command a premium? Right, and more importantly, is to satisfy certain, maybe it's a very explicit collaboration and partnership that you need to get to fulfill that trend, rather than from a pricing standpoint.
Yeah, first of all, I just want to say that Mother's Work took so much money from my, savings. It's ridiculous. And I do love Yo-Yo, and I do love a couple of other things as well.
So you've been a buyer of the product.
And I've got 2 cats, so, very expensive stuff. So my Jaxx is, from the lower price point perspective, $10, $15. Ours is a B2B2C, the way we look at it, the flow, because of the technology. So, growing alongside KKV, Bilibili, and, Miniso and so on, especially in Indonesia, was a very quick ramp up for us, right? And so we are able to get connected to our consumers from that perspective for, recurring purchase and understanding of the customers and so on, right? Now, from the high-end side, recently at San Diego Comic-Con, we launched a new brand which does statues. So it's 0.5 meter to 1 meter type of statues. It's ridiculous. It's Transformers, and it's beautiful. We have 6 robots on there. And the retail price point of it goes at $3,999 US. Then that is the base product. And we actually offer customization of that item, whether you want a meteorite core or like a 24K gold or silver, or if you want to make the whole thing gold-plated, that's absolutely fine. You just have to pay 10 grand for it, right? And my point is that people love that so much because people who could consume that kind of price point, they would. And I think I echo the 2 ladies over here, right? Because it's definitely no place for the media side of things at this moment. It used to exist, but not quite so now. And if we're going high, then you got to go like really high and think about what the consumers would actually want. Whether is it a white glove service or like a lifetime warranty that Rimowa does very well. Things like that. I think what do they need and what do they want? Once you answer that, whether is it 10,000, 15,000, it doesn't really matter. I think at that high price point.
Clearly the need to know your customer, what do they value, and the willingness to pay. I think that's the key there. So the next topic, I think, actually relates to the Southeast Asia market itself, which is, I think, how everyone here started, right? But, the question for some investors that people would ask is the Southeast Asia market big enough? Is the Indonesia market alone, yourself being here at some point, would Stephani yourself also think of expanding beyond that, right? Because you would need to kind of broaden the addressable market and expand further. And then I believe we can move on to, I think for Parentinc and for Mighty Jaxx, you have much more international operations.
Yeah, so to be very honest, I think in the pet segment and pet sector, Southeast Asia is still rather small. But the growth cannot be undermined. So the growth is extremely fast. It's a lot faster than other countries and other continents out there. And I think with the demographic bonus, the disposable incomes that people have, and the willingness to pay actually for the super premium kind of customers. So we think this is something that is big enough in the next 5 to 10 years. But then again, if we want it as a company to be scalable, I think D2C is the first, other countries are the first that we wanted to tap in and enter in. But we also need to move further, maybe to the Australia and maybe to the Europe or US.
Australia, yeah. Yeah, okay. And then I believe for Mighty Jaxx, you're already kind of, Europe and the US are some of your key markets there, right? So it's, could you talk a bit about like strategy? How did you, quickly figure out these are the key markets of interest and, get in there?
Yeah, so for Europe and North America remains the largest market for us. And to support that, we do have local team over there in London and both East and West Coast of US to help support any kind of new product launches and so on, events. I think really because in the US, it's much more mature in terms of pop culture. The consumption is there. It is also the land of where it originated from, the movies and so on. So it's naturally quite a mature market for that. And Europe, it's really a green field for us. There isn't much of our products on the mass market that you would see over there in the channels. So when the Germans, the French, they see it, it's a very refreshing way of purchasing pop culture because we mostly deal with like blind boxes, which is you don't know what you're gonna get. Maybe you'll get this, but you're gonna pay like $15 first, right? And so that worked very, very well because everyone wants to chase the most rare character and so on. So that worked too. But what was interesting, if I bring it back to Indonesia, right, it's that quietly over the last couple of years, Indonesia ramped up to be one of the biggest contributor of our revenue from Southeast Asia. And that was surprising because we honestly didn't do much work in there. We don't have a local team as well. But this is the clear difference of how Southeast Asia grew as opposed to the slower growing part of it in Europe and North America. We're ramping up so quickly with the K-pop side of things, with the middle class coming up. We're seeing a lot of products being sold over here. So for me and my team, I think for our first flagship store in the world, actually, we wanted to be in Jakarta. And there's no better place to be because we want to have both the higher end and the mass market type of products.
And Roshni, I think, how do you see regional expansion for you?
So we're already in 8 out of 10 of the Southeast Asian markets. So we're in most markets. So you can make quite a big, decent sized business. I think if you want to make a $100 million, $200 million business in specific niches in Southeast Asia, you can totally do that. You can also, make 20, 30, 40 million in profit in Southeast Asia. It is very, very possible. Now, the question is that, do you want to make $1 billion in revenue? Then that's not possible. I just don't see it, especially in niches. So I think it really depends on each different business. The other thing is that demographics sometimes can lie. So I study demographics a lot to decide which countries I want to enter into, which countries I don't want to enter into. I've had, two examples here. So the first one is I entered into a big market like India and US, and I failed dramatically. Because I even though the demographic was right, I didn't have the right to win in these markets because I didn't have a big enough team. I wasn't spending all my time there. So it's sometimes not just about looking at demographics. Another example here is that Singapore. Does anyone here have any idea what the birth rates of Singapore is? In a year, how many thousand babies or hundreds of thousands of babies do you think Singapore produces? Any wild guesses? Yeah, just any number. Someone shout out a number. Oh, less than 1,000?
100K.
Okay, 100K, 1,000, okay, somewhere in between there. Singapore produces 35,000 babies thereabouts. So somewhere between 30 to 40,000, depending if it's dragon year, etc. In a yearly basis. This is not monthly. Now put it in perspective, Indonesia has nearly 5 million babies every single year. Singapore has 35,000, okay? But yet, we make a lot of money in Singapore. My Singapore business is equivalent to the size of my Indonesia business, which is mind-blowing. So it just because a target market could be really, really small, that doesn't mean that it cannot be significant and very sizable. So yeah.
No, I think for sure it's maybe the willingness to pay, right? What is the AOV that you can actually extract, and that varies a lot as you look across Southeast Asia markets. It's so
my
different.
basket size in Singapore is about $500 to $600. My basket size in Indonesia is about $18. So 1.8.
It's a huge difference there, right? So I think, conscious of time, maybe I'll just round out with a quick question. I think clearly there's a lot of potential of D2C brands continuing to grow. But as it relates also to the challenges, right? I think we see post-pandemic, customer acquisition costs have increased. It's a lot of competition. So maybe just if each of you could quickly just share, like, how do you, out of which is the biggest challenge that you have faced, and how do you kind of overcome that?
Okay, so maybe I'll start. So I think the hardest one is to acquire new users, because people here with economic changes, they don't want to try anything. So they wanted to be sure and to firm that this product that they're going to buy is actually value for money for them. So this is what we're thinking important, is actually to gather the vets here in Indonesia to introduce our products, to educate the customers. Because when we go ourselves like, hey, our product is very nice, it's very healthy and everything, people won't trust it because we're new compared to the famous brands out there. So getting the right person to educate the market is something that we're thinking is very possible with the challenges that we had. And the second thing is that people are, their basket size is actually reducing. For the premium ones that we have, the 2,000, so 200K rupees per pack is actually okay. So we have no issue with those kind of customers, the premium customers. But the middle ones, they're trading down, so their basket size is reducing. So what we're thinking is that we have to get creative with how we price our products. So we play with the grams. So for example, the current S16 products that is considered premium, they have like 20,000 rupees per 85 to 100 grams. But we wanted to look premium affordable. So that's why we price our products is at 10,000 rupees, get half the price of the premium ones out there, but we reduce the grammations. So it's only 50 grams. So that's why we're doing that with our cat food brands.
And Jackson, what about yourself?
I mean, over the last 2 years, the most challenging one for us is the scaling of the supply chain part of it, the production and logistical. Of course, cost goes up year on year for these things because of raw materials. And so customers are kind of like iffy about paying, extended sort of shipping prices coming out from Singapore or from our warehouse in China. And I would say 40% of our demographic and customers are actually from North America, so there's a lot of shipping to be paying for. And the team actually went on to create distribution centers in Europe and US so that domestic shipping could be achieved. We should have done that way earlier, but we did it, and it was really, really painful. And so that was one thing that we solved through this period.
Got it. And Roshni, maybe just to wrap up, it's clearly a very different set of problems as you go through the startup journey.
So I think one of the biggest problems as well for startups is, I would say for me, I can't generalize for all startups. The first one is, how do you ensure you keep focused on the metrics that matter and keep focused on like not doing too many things. I think for a lot of us here in the room who are founders, the thing is founders, we're naturally more inclined to have ADHD or some personality disorder. Okay, if we were normal people, we would not go through this hardship. So we are abnormal, which means like, how do you keep yourself grounded and not create more chaos and really focus on what matters? So I think for me as well, it's about reeling it in. Sometimes I have like 100 new ideas I want to do. And then I'm like, no, let's focus on this, let's execute. So I think that's one. And then the second one is scaling. So I think as each of us, as we go through different stages of our company, as founders, we need to be able to scale. And sometimes scaling also means being able to do the hard decisions, like firing your co-founder, asking a board member to exit the board because they are more disruptive than they are, good for the board. So being able to scale yourself and being able to really do things that matter is something that I think a lot of us founders have to grow as the company grows with us.
Yeah. No, thank you so much, I think, for sharing the insights. I think time is up, so I've got the cue card there, but I think, really appreciate the sharing of the journey. I think we will definitely be looking out for all these D2C brands in our life, and yeah, I think we'll be buying more products. I think definitely the audience here after looking through your goodie bags. Yeah.
Awesome.
Okay,
thank you, everyone.
Thank you, everyone. Thank you.